Today is Friday, 6th of June, 2025, 6 a.m. Eastern Time. This news is brought to you by Preeti Capital, your trusted source for financial insights. Trend check. The S&P 500 index is currently exhibiting a mixed performance, with a 50-day moving average breadth of 68.1 and a 200-day moving average breadth of 44.6. This breadth indicates a relatively healthy short-term trend, although the longer-term outlook appears less robust. Sector returns have shown varied changes, with the XLB sector declining by 0.99%, XLC by 0.41%, and XLE by 1.41%. Conversely, the XLRE sector increased by 1.02%, and XLP saw a modest rise of 0.6%. The ratio of the responsive SPY has also decreased slightly from 0.301 to 0.299, reflecting a percentage change of 0.56%. This decline in the response ratio suggests a potential weakening in market momentum, which could be a signal for investors to exercise caution in their trading strategies. As we analyze these trends, it becomes evident that while some sectors are performing well, others are experiencing downward pressure, indicating a complex market environment that requires careful navigation. Market Pulse, top movers. Tesla, TSLA, shares faced a notable decline of 14% on Thursday, marking their worst trading day since March, although they managed to rebound by 0.8% in after-hours trading. Despite these hurdles, Lucid recently secured a multi-year supply agreement with Graphite One for American-sourced natural graphite, essential for future vehicle production, and reported its sixth consecutive quarter of record deliveries. In the AI sector, NVIDIA, NVDA, continues to thrive, planning to re-enter the China AI chip market with its new B40 processor, and reporting a remarkable 69% year-over-year revenue increase to $44.1 billion in Q1. The company faces competition from Advanced Micro Devices, AMD, which has made strategic acquisitions to bolster its AI software ecosystem. In contrast, Ford Motor Company, F, closed at 1024, up 0.49%, reporting a 16.3% increase in U.S. vehicle sales for May, despite concerns over future tariff-induced price hikes. Overall, the market is witnessing significant volatility, with various sectors experiencing both gains and losses as companies navigate complex economic landscapes. Stocks to watch. On June 6, 2025, several notable companies are set to report earnings, each with unique developments that could impact their market positions. Coca-Cola Euro-Pacific Partners, CCEP, will unveil its earnings with an implied move percentage of 3.55%. The company is also hosting a capital markets event in Manila to discuss its growth strategy and has announced a dividend payment of 0.79 per share, yielding approximately 2.5%. CCEP has impressively maintained its position on the Carbon Disclosure Project's A-list for climate for 9 consecutive years, reaffirming its comparable operating profit guidance for the year ending December 31, 2025. Similarly, KT Corporation, KT, is expected to report earnings with an implied move of 5.24%. The company recently filed its Form 20-F annual report for the year ended December 31, 2024, and is trading at 85.8% of its 52-week high, reflecting a 2.1% price increase over the past month. With a Zacks rank of number 1, strong buy, and a PE ratio of 6.33, KT presents strong value potential. Sibanye-Stillwater Limited, SBSW, is also on the radar, reporting earnings with an implied move of 12.15%. The company has formed a strategic partnership with C5 Capital to explore advanced nuclear energy opportunities, alongside a 9% year-on-year increase in adjusted EBITDA to R3.3 billion, driven by a remarkable 292% rise in its South African gold operations. Other companies reporting include ABM Industries, expected earnings of 0.87 per share, Manchester United, with plans for a new $2 billion stadium, and Booking Holdings, paying a dividend of 9.6. PepsiCo and Kimberly-Clark are also set to pay dividends, while Vodafone has completed a significant merger, enhancing its market position. Northern Trust Corporation will announce a dividend of 0.75, reflecting its recent share price increase and strategic appointments. Each of these developments presents potential opportunities and risks for investors to consider. This commentary is for informational purposes only and does not constitute investment advice. All data are believed accurate but are not guaranteed. Opinions reflect the author's view at publication time and are subject to change without notice.